Well, all that glitters is gold. The yellow metal rally has been unstoppable as tariff tensions spurred safe haven buying. Hello and welcome to another edition of Commodity Champions. I'm Manisha Gupta, and the gold has hit record highs for 20 days in 2025 in various countries including US, India, China, Japan, Australia and some more. Falling yields and a weakening US dollar has aided the yellow metals rally. It has gained over 18% between January and March this year, making it the best quarterly gain for the metal since 1986. Joining me now to discuss this further are Sachin Jain, MD World Gold Council, and Ananth Padmanabhan, MD NSE Jewelers. Dileep Narayanan from Malabar Gold as well joins in to weigh in his thoughts there. Thank you, gentlemen, so much for making time for this. Sachin, to you first. And it has been a one-way rally and quite interesting at that. Tariffs on one side, China insurance companies buying is the second thing, the geopolitical tensions the third, and then the investment buying globally has been quite on the stronger side as well. Now, from where we stand, how does 2025, the rest of the year, look to you?
So, Manisha, thanks so much for getting me on. And in a very short span of 30 seconds, you've given all the points that I was thinking I would give. So just dwelling a little more, you mentioned about the 20 gold peaks, all-time peaks that we've already witnessed in the year 2025. This has already given us a 19% up. That's huge and one of the best asset class performances. Now, you talked about the tariff issues, which of course should get little more clearer in the coming weeks. But also what you softly touched upon is the pension fund opening of buying, particularly in China. And that, I believe, is going to be quite a significant change, which is not temporary, but quite a significant long-term sort of trend that we'll witness. We also open similar conversations in other markets, including India. Let's see how long it takes. But just to give you a sense that even if that market opens up to 1% of their AUM to be invested in gold, that is humongous. That's over like 600 to 700 tons of gold that they might sort of get into buying. So that's quite permanent. But you're spot on. The rally is strong, and all the elements around geopolitics, the conversations that we've been hearing from the US, not just on tariffs, but also on Iran, also on Russia, have been all sparking off the geopolitics even further, and are all strong pillars of why we see what we're seeing in gold today.
Sachin, a lot of people have been putting out those numbers of $3,000 an ounce, and then people revised it higher to 3,100 and then 3,200 for the rest of this year. But we've seen most of that getting achieved in the first quarter of 2025, if not the second quarter. And April is when markets believe that you could perhaps see the gold prices peaking if things change for any better. Any idea? There has been a report from Goldman Sachs suggesting that if it gets extreme in those circumstances, 4,000 and 4,500, I mean, you throw something and you'll find a number there, is what we really seem to be getting from the markets right now. We are into uncharted territories. We don't know a lot of things right now. But with the way the gold seems to be garnering a lot of safe haven money, smart money, new money as well, what's your sense?
Well, I think you mentioned about Goldman Sachs prediction. And the other thing they've also predicted is they've now proposing 35% probability of a US recession coming in. So a lot of these, as you said, numbers are out in the air. But I think if you look at the fundamentals and the basic articulation of gold around being a safe haven, around being liquid, around being a great diversifier, I only believe that through your channel, to your audience, I would only want to say that look at gold from a long-term perspective and not week, month as well. And the fact is that all these elements around the pillars of why gold is where it is today, they all seem to be in the favor of gold in the short term to medium term.
Dileep, Sachin would keep it away when it comes to talking about gold prices so much, but I do want to talk that with you. What is your sense? I mean, what is your back of the envelope sane calculation on where gold is going?
Well, thanks, Manisha, for inviting me to the discussion. And such as Sachin mentioned, the gold is a rally which is going up, like as you rightly mentioned, for the last one of the best quarters which we would have ever seen in terms of return. Well, as a retailer, we've never seen this kind of a rally for a long period. Of course, the gold has been bullish, but this phenomenal jump for the last 3 months, or rather the last 2-3 weeks has been too high. The moment it reached 3,000, from there the rally's on. I think that it wouldn't stop here, and it would definitely take up to next level of 3,400, and from there, the new level would be around 3,400 to 800 levels. And on a long term, with all the experts and with all the analysts speaking, and with all the tensions prevailing in the Western market, it looks like the gold is going to be bullish, and it's not going to come down any soon for whatsoever it may be.
Dileep, for a retail house in Indian markets with the gold prices going where they are and a market which is slightly price sensitive as well, how has your experience been in last 3 weeks or 3 months?
Well, to be very open, there is buying happening in the dips. There is, as you see the gold price going up, the people who have been sitting in the fence waiting for the price to come down have started slowly moving towards store to buy jewelry, which is the pending buyings. And then, as you know, that the festive seasons are on, and in India there is no stop during the festive seasons of buying gold or not buying gold. So yes, Akshaya Tritiya we're waiting for the Akshaya Tritiya, and then from there a couple of other. There was a good Gudi Padwa which was over last 2 days before. We saw a good rush in stores during, and that was at that period of the time also the gold price was on the high. So yes, as far as India is concerned, the retail the thirst for gold will still be on. Maybe on various dips, the buying power would be the pattern would be more. But yes, definitely there is going to be demand for gold.
Dileep, would also want to get an understanding on how are you looking at it as a bullion to begin with? I mean, keeping inventory, hedging it, the metal loans or the lease rates have been on the higher side and very wild numbers coming in from there too.
Well, the hedging policy has definitely gone haywire a little bit because of the lease. The cost of doing business, the interest rates because of the lease rates going up, it did affect. But as a pure hedge mechanism, any retailer would want to not take any risk, and that's what we also follow. We have a policy in place through which we follow, and any retailer would want not to have a what do you call it? Would not want to take a risk on gold price, right? They would not want to speculate, and that's what globally any retailer would want to do. So lease is one of the best options, but if in case that you feel that it's on a costly side, of course there is exchange. You can always hedge on various exchanges. Now that you have your local exchange, and also now for a certain extent the IFSC is also open. So yeah, there is a lot of new mechanisms opening for a retail company like us to hedge us.
Anantha, getting you in the conversation as well, what is your sense with the gold prices? Dileep has just given us a sense that prices can go to 3,400, 3,800 as well on the higher side. Are you making any sense of these current numbers, and would you have a forecast as well?
Yes, very good evening to all of you, and a great financial year to all your viewers. See, gold prices have been going, it's unstoppable. So looking at 3,400 and 3,800, I don't think that it's going to happen in the near future, because there has to be a correction, and the correction has not happened for a very long time. So there has to be a huge correction. If you see the past 30 years, 40 years of how gold has behaved when there is such a big jump, naturally the prices have corrected by 25%, 30%, and once it has corrected even 56%. So when the horse is running fast, people will say faster, faster, but it cannot go on and on and on, because a bubble would be created. So my anticipation is there will be a correction in the coming days. But unfortunately, our US president, every day there is a statement, and markets are reacting to it. Yesterday, he spoke about Iran, and he's also talking about the third term for himself. So all this is not that good for the markets, but prices will fluctuate, and it will correct sometime. Even before it reaches 3,400, 3,800, I'm sure it has to come to 2,700. Then only it can take off, because these tariffs, one day it has to come to an end. How long it will go on? Now on April 2nd, we'll know what is going to happen. So with all this in mind, they are trying to pull it as much as it can, so that whatever the fall is, it will not fall bigger. See, when it was 2,900, if there's a correction, it would have come to 2,700. But now, unfortunately, 3,150. So even if there is a correction of 5-6%, then again it will be below 3,000. But this year and the coming years, it's going to be on the positive side. And whenever there is a dip, I would suggest my customers to buy. Consumers have to come forward and buy at the corrections. They cannot wait for the prices to have a very big correction. But going 3,400 and 3,000, I mean 3,800 and all is too early to say about it. Yeah, because I've been watching last 20, 30 years. So I can see that.
Oh, well, yes, but we haven't seen a kind of situation that we are into right now, where you have tariffs, where you have dollar. There is a concern about recession and a stagflation as well. So, Sachin, what is your sense? A correction is something that the markets has been waiting for, but they've been waiting it for since it was 2,900 and 3,000 and 3,100. We haven't seen that yet.
No, sure. I mean, and on that point, Manisha, the 2,000, 2,500 rally, and I'm sure we talked about it in your platform before, took 1,720 days. The 2,500 to 3,000, which is another $500, it took just about 217 days. So it's been incredibly fast. It's and the market is just playing a catch up. We do a lot of surveys from the consumer lens, and particularly in the lens of what Dileep was talking about, that Akshaya Tritiya is around the corner. We just finished Gudi Padwa, we saw Eid, and we and the entire team have been out on the floor. And I can tell you the buoyancy and the confidence on the retail consumer to buy jewelry is super, super high. Yesterday in the floors, we saw very good footfalls. I mean, I went to stores in Andheri. We were also covering the Delhi market and the Calcutta market. Lots of footfall, decent conversions, but which only reflect the confidence that the consumer has. Now, will this go up? I mean, who knows? And I quite am aligned to what Ananth sir mentioned, that when the horse is running too fast, it needs to calm down. But again, my view would be long term. All the pillars around gold are in favor in the mid to long term.
Well, yes, when you look at long term for 2026 and 2027, most banks also believe that the gold prices will be higher than where we stand right now. But the current momentum on where that can take gold prices, what kind of correction do we see? The next couple of years, longer term is still positive, but the near term is what is really keeping a lot of us quite jittery. But gentlemen, stay on with us. We'll go for a very short break. When we come back, we'll see a more forward-looking statement in sense of how 2025 looks like and where is the money coming in from, and further in case of gold. Well, we are talking about gold prices, and that clearly has been a headline for all of 2025 till time, clearly outperforming various other asset classes. And the way things are, we are looking at higher and higher numbers coming in from there. Dilip, this one is to you. When we look at gold prices from where they are, and if we are anticipating higher prices from here, what is the impact on an average consumer in India? Are we looking at gold in sense of an investment? Are people going for more ETFs? Is it lightweight jewelry? Is it low caratage jewelry that's doing better?
Well, the pattern seems to be, changing a bit on when it comes to a retailer. Yes, definitely the people who, as I told you, been waiting to buy would look at dips and definitely buy at on various levels. But maybe in terms of weight, damages they might reduce for this lower middle, or I would say the middle class segment the weight might come down because of the price going up. But overall, the ETFs are definitely growing. I mean, there's no doubt about it. The investment bars are going in very well. But it all matters at what levels the buying happens. So once the marriage season starts, especially in South, those buyings are yet pending. That's going to start in very soon. So it is based on the dips that people are going to buy. Yes, definitely the weights, in terms of grammage, it might reduce a little bit here and there for the reason why, because the price has gone up. But the retailers are still going to be purchasing gold on different various levels.
Dileep, I have a follow-up question on that. We've seen a lot of retail chains go for expansions, and that really means more inventory, more gold buying. And in Maharashtra, we've seen the stamp duty go higher as well. So that's about rentals and getting places. And there's a lot of factors in play here. How would you deal with something like that?
Well, Manisha, the expansion means, the more you have new stores up and running, you depend upon the hedging mechanism. That's the only way, you can run a volatile market. You can have your jewelry on, and you have your product on with the proper hedging mechanism. I don't think so. That shouldn't be a problem. It's the rest of it's all about your capex and in what kind of a size of store you open. But as far as the gold price volatility is concerned, I think a proper hedging mechanism will definitely help you open up new stores, and then wouldn't have any kind of a price disruption while doing the same.
Point taken. Ms. Padmanabhan, what's your sense on this? As a jewelry, as an industry, how are you looking at the patterns and sense of people buying? Is the heavy jewelry doing as well? Are people talking about making charges? Because that's a percentage of gold prices which has gone up by just too much in the last couple of weeks, perhaps.
Yeah. That's why recently, if you see, there has been a lot of discounts from the jewelers to attract the customers, because customers are paying a high price for gold. So people can afford to give a discount on the making charges, value additions. So we see business flourishing everywhere. See, India, we have a lot of marriages coming up. It's a big country. We are heavily populated. Gold has to go on. For every wedding, there is gold. So what my opinion is, people will buy, but they will buy according to the budgets. For the daughter's marriage, you'd have saved 10 lakhs or 15 lakhs. He will buy only for the 10 lakhs or 15 lakhs. So the weightage will come down. So we need to see how we are going to increase our weight. If I'm selling daily 100 grams of jewelry, I should maintain that 100 grams. So I need to attract more customers, more class of customers should join. So my designs has to be innovative. My advertising has to be innovative. So all this happens, definitely we can maintain our turnover in weightage, not in amount-wise, because amount-wise every year it's going to go up. But weightage is more important. Only then we can continue the same weight of quantity of workmanship with our workers. See, if I'm producing 3 kilos of gold, the workman is getting benefited. Suddenly, if the 3 kilos becomes 2 kilos, the workman will get affected. So that also we need to look into. But we are a fast-growing economy, so we are very positive that business will be good, whatever the price is. Only thing, it has to stay at one level. If it is too much going up, means people can't accept it. So even 3,000, it's fine. Let it stay for some time. Definitely customers will come forward because their confidence will go up. Because as prices go up, their confidence also goes up. And now and then World Gold Council also very positive always, and it also adds to this benefit.
Oh, well, absolutely. I'm going to go to World Gold Council soon, but I have one more question for you, Mr. Padmanabhan, and that is that we're looking at 92,000 per 10 grams. Add making charges to that. We are perhaps at ₹1 lakh per 10 grams already. Is this something that the buyer has been able to digest yet?
Yeah, that's very difficult for them. But see, one thing we are noticing is our monthly savings scheme, where customers save 10,000 rupees per month, every month. This week, when they are coming for to renew their chit, people are not buying only the jewelry, but they are not renewing their scheme. They are waiting for the prices to correct. So that immediate impact will be there. But otherwise, as time goes on, people have to adjust to the new prices, because I've been seeing prices right from 100 rupees per gram. There has been no stop at all. People have been buying at every level. People are buying, and it will continue. It will continue.
Oh, well, absolutely. If you remember, sovereign gold bond scheme that came in 2015, the gold prices were at 2,500. We're trading at 9,200 right now. So clearly a huge jump up there as well. This one is to you, Sachin. How are you looking at Indian investment buying now? ETFs, even as we've seen strong growth, but remember the base was low. So the overall AUM still stands at around 1.5% perhaps. So not in the overall scheme of things, it still is a very small number there. Gold bond scheme is done with, monetization scheme is done with now. So when you talk about financialization of gold in India, what's your sense going forward?
I think, Manisha, when you said let's look forward and seeing what's coming, I think from my perspective, you mentioned about ETF, which has done really well. You're absolutely spot on. The base is low, but we believe it's at the cusp. It's a fantastic product in terms of regulated product. It's transparent. Every gram, every unit of ETF is backed by physical gold, which is phenomenal. And the way I see moving forward, and your first question to Dileep was around who's really buying. And I think our research says that a lot of the financial savvy young consumer is getting more and more inclined towards gold. We as an industry need to do better to get through to them with newer, fresher products, and you'll see a lot of these coming through. And getting gold being a little cool, you'll see all of those things coming in. But clearly, I think a lot of demand generation from a young consumer will happen on the financial side. And what we're also doing is that we are trying to bring the ETF financial world and the jewelry world closer. And we're trying to do a pilot very shortly, which is around a fungibility of the ETF into a jewelry store. So the intent is that we bring these two very diverse worlds a little closer. And I think a large sort of future projection will be coming from the younger audience. And that's what matters, because the large bet on the future of India towards Viksit Bharat is on the young India. And I believe that the financial sort of education is there. And with newer products, a lot of innovation coming in that area, it's going to get very exciting.
Dileep, what's your sense? What are you looking forward in 2025, and what are your strategies? As Sachin says, he's betting on younger generation here. What are you betting on?
Well, as a retailer, the segments definitely are mixed. I mean, yes, there is new generation which do buy a lot of 18-karat jewelry, and there is also the pent-up wedding demand for which the season is going to start. So, and yes, the investment bars are also on. So it's going to be a mix of buying pattern. But it's going to be very interesting. I mean, this year as compared to last year, because of the price rally, we would definitely see buying happening in dips. Okay, we might see a volatility in buying, but one thing is for sure, as Sachin mentioned, as Mr. Padmanabhan mentioned also, this year is definitely for gold. Kind of return it has given you the last year and a year before, for at least on an average. For the last 3 years, it's given a fantastic return, and that's going to continue. So the segments are going to be mixed. The retailers will definitely do well. It's about, as Mr. Padmanabhan rightly mentioned, it's all about getting in more clients to your stores. So how do you bring them in? How to do more awareness about gold? To speak more positive about gold, because that is giving you a lot of positive return.
Oh, clearly. And I take your point on the fact that 2025 is going to be very different from what 2024 was, given the way we are in sense of prices. And nobody really believes that the Trump tariffs turbulence is going to end anytime soon. We perhaps could be looking at it for the rest of the year as well, and that would keep the gold prices perhaps in headlines going forward. But I get your enthusiasm and optimism on this, that, well, yes, India is a gold buying country, and we could be looking at that throughout as and when prices stabilize even a bit. Thank you, gentlemen, so much for joining in with your sense on gold and the markets going forward. With that, it's a wrap on another edition of Commodity Champions. Many thanks for watching.